see you. I know you did a live with us on this past Wednesday. You've joined me on this live a couple times. I'm glad to have you back. How's your week going?
It's been great. Not too many trades, but it's been okay. We just been doing.
Summer in the U.S. is slow. That kind of dictates
Yeah,
the markets. Not a lot of market participants. Volatility is kind of low. We're just kind of waiting to see what happens. Hopefully,
but
what do you think? Kind of next 2 weeks we start getting back to normal, or are you going to wait
I
all the way
hope
to
so.
September?
No, I hope so. August is a good month for me, although September is like kind of better. But I
Yeah,
think in a
September is when
few,
everybody, the participants, like kids are back in school, people are back at their
yeah,
desks full time. We really get a large surge in market participation in September.
for sure. So yeah, hopefully in a few weeks we get some movements.
So talk about summer and kind of staying away from the markets. Have you done any traveling this year?
I am like not as often, just a few little trips for some exams that we're doing, and appointments that we have. But other than that, not much. Because actually here in Colombia, vacations, the big vacations period is in December. So
Oh,
like
got it.
right
Right.
now, we only had like 3 weeks, and then everyone's back to normal.
Got it. Cool. Cool.
Yeah,
So I know you had one of our big affiliates on this week on your Spanish live.
I
How
did.
did that go? How did the show go?
It went it went great. His name is Eloy.
Hmm.
Good. We spoke about mindset, his journey throughout all the years trading, his trading style, and then towards the end we do a giveaway, and we're actually doing some giveaways every week in those live sessions. So it was a great moment.
Awesome, awesome. So, guys, if you want to join the Raul's Spanish show on Wednesday, he does a live giveaway every week. We're actually going to start doing a giveaway on this show as well. So, thank you for bringing that up.
Awesome.
We'll probably I
Yeah.
don't know if we're gonna do it every show, maybe every Friday, maybe twice a month, but we're gonna work a giveaway into this show as well because it's been so well received. So, thank you for doing that. So, tell me a little
Oh, it
bit
is.
about Eloy's journey for people who don't know him and don't know his story.
Well, Eloy is a trader from Venezuela. He did say that he moved to Colombia like a few years ago, and then he's back in Venezuela at the moment. But when he came to Colombia, he started to learn about trading. Couple friends, videos like everyone else starts, and
Hmm.
then he was basically trading like many strategies throughout the years. I don't remember how many years he's been trading, but he did mention that within those years he did look at my mentorship through YouTube. So 'cause I have it in Spanish, and he actually saw that mentorship, saw another mentorship, started to develop his own strategy, and then he did mention that he loves the lower time frame, charts. Although he keeps in mind and he keeps aware of the higher time frame charts. So
So, is
has
this a
been
change that happened to his trading? Was he always a higher time frame guy and then he went lower time frame?
actually no. I mean, he's always been into the lower time frame. What did happen, or what the change came, is that he did start to incorporate the higher time frames. So he was like at the beginning, like mainly focused in lower time frames, and he was setting quite some stop losses. But then, after the time, he did realize that even though he was using the lower time frames, he had to know all the context, like the main picture, which you find in higher time frames. So
Right,
his
right. We
his
we get
change.
that question a lot, and it's kind of abstract for new traders. They don't really follow it so easily. Can you give us a quick explanation of, you know, why it's important to look at higher time frames where they might just be a wick in a higher time frame, but in a lower time frame it's actually structure. Why is it important to look at both in your trading?
Well, in opinion, I think the higher time frames is the big picture. In the end, institutions move along, objectives on the higher time frames, monthly, weekly, and daily. In my case, are the main time frames for direction or the bias. So, like, the big targets are going to be in the higher time frames. Just to put you a quick example, let's say I make a quick analysis and I move down to the daily time frame, right? In my case, since I'm intraday, the daily time frames gives me not only the levels which I can options of trading for the next day, also the targets. I mean, just look at the low and the high of the previous day, and you can see that in a wick. And
Right.
even though it looks like normal or anything like nothing important, you'll see it. You could do the exercise. The people viewing it on euro dollar or Nasdaq or gold yesterday. It was a bearish day, and price went directly for those daily lows as targets. So if you're not aware of that, then you go into the lower time frames and you're just gonna see it's gonna be very noisy, and then you don't even know where to target. I had a class yesterday with a student of mine, and she was telling me, every time I go into 1 hour, 4 hour, even 15 minute, I kind of get lost. I don't know if I should buy, if I should sell. Like I think it's a good scenario to sell, but then the price goes up. So I just kind of directed her to the higher time frames. See how daily closed yesterday, and then that will be kind of like a hint for the next day.
Right.
And in
That's
my
going to give
case,
you your outer bounds. So now you know kind of
right,
you have an absolute high and an absolute low, something to work off of. Now,
of
how
course,
where do you place that in as far as importance goes in your training? Would you say this is a cornerstone of your trading using a higher time frame?
for sure, like higher time frame for me is the main deal. I mean, daily and weekly, monthly are very important as well, and we look at them towards the end of the month, towards the end of the week. But daily is like if you really want to understand what's going on, you need to know what daily's doing, right? And then there's always a reason, and the market doesn't just move randomly. Like you just want. There's always targets. There's always reason and a whole picture you'll find in the higher time frame. And daily, I mean, if I don't have that in mind, I'm just gonna be lost. I can't analyze if I don't know what the whole context is.
Right, right. Yeah, you really hobble yourself if you're not looking at those absolute highs and lows. As we
For
get back
sure.
to those points, it becomes so important to know where they are. And when you're looking at it on lower time frame, all that structure it does, it adds a lot of noise and creates, especially for new
Sure.
traders who don't know what they're looking for, it creates a lot of confusion.
Oh yeah, for sure.
So Eloy had a kind of a turning in his trade where he went from time frames and he started to realize some success. What happened next?
Well, what happened was with several companies to implement his strategy, and then he started a lot of people in his ecosystem. Right, he had a lot of people, friends from Venezuela, and that Venezuela wasn't going through a good moment. So
Hmm.
a lot of people from Venezuela started to look at trading as an opportunity, you know, overcome that situation, that government situation, their economy and
Sure.
stuff. So he found it very productive, and he was able. So after that, he did open his own academy, and he a very decent community which he teaches his strategy and stuff. So he's
Awesome,
growing.
awesome.
Yeah.
Give me the basis of his strategy. Kind of, is it a momentum strategy? What's the background? What are the mechanics of it?
It's kind of similar to mine. It's mainly like structure, liquid loans. He has three types of entries. I'm not really sure of them because I really haven't seen his
Hmm.
course. But he did mention he's mainly focused on the structure, the zones that the price has, and liquidity, and a few concepts of smart money. So that's did mention to me in the previous
Nice,
life.
nice,
Yeah.
awesome, awesome. And what is the name of his academy in case anybody's interested and wants to go take a look?
Well, you'll find them at Loy Coronel or I forgot the name. I think it's the Trade Academy, something like that.
Okay,
His name, Eloy Coronel FX.
got it. That's on his Instagram.
Yeah,
Okay, perfect. Description here. Well,
we're
thanks
gonna
so
we're
much
gonna
for
have a
having him
few
on
more
and
affiliates
interviewing
on.
him. Okay, awesome, awesome. Yeah, thank you so
Yeah,
much for having them on and interviewing them. And I know it's a huge help to the Latin American community. People, it's your teaching is great, but like it always is, sometimes people jive with somebody else a little bit more. So it's good to give people a broad spectrum of flavor. So it's so nice for you to
oh
be able
yeah,
to introduce these people to the community.
oh yeah, for sure. There's really no. I mean, I'm a friend of any strategy as long as it works for that person. I mean, just go for it. So there's really
Right,
no.
right, absolutely.
Mhm.
Good to know. So let's jump back to your trading for the week. I know you said it was a little slow, but give me a recap of the week, your trades. What did it look like?
In my case, this week was I
Okay.
did take a trade a few days ago, yesterday, day before yesterday, on a gold. I took a buy. Basically, it was just looking for some daily highs, some have on that day. We managed to take the buy. It was a very R 1 to 6, 1 to 5, something like that. And then the
Oh,
next day,
beautiful.
the next day I was looking for it to take a gold, but I just didn't manage. It didn't trigger me in, so I kind of. But it's basically, like a really push to the upside towards the beginning of the week, and then now yesterday, very very good momentum to the downside, which I really regret not getting into, but it
Well,
happened.
talk a little bit about, you said it didn't trigger you in. So, you have a
Yeah.
very specific trading plan. You have trading rules that you follow with very good adherence. Had you had just gotten to that trade, willy nilly or, just by emotion, and it didn't go your way, it could have been bad. So tell me your
Oh yeah.
thought process on that. How do you look at a trade that worked out but wasn't to your trading plan? Do you have like remorse for it? Or are you happy you followed your process?
I'm happy. Like, there's something I always tell my students, and it's like, you know not respecting your plan is not necessarily like doing stuff that's not in your plan, right? For example, some people say in their plan just a basic thing, when the price touches this level, I'm going to trigger in. That's that could be a quick example, very basic. Now, if your plan says that once the price comes back to that specific level you have to trigger, and you don't do it, you're really not respecting your plan either, right? I mean, in my case, if the trade doesn't go in my levels, I'll be happy. I think I was able to work that out. It was stressful at the beginning because you
Hmm.
always want to be in it. That FOMO that,
Of
price
course,
in
yeah.
you. So it's like, it just happens. In the end, it's not the only trade that the price or the market's going to give me throughout the week
Right.
or the month. So, I'm pretty
I
happy.
feel like
I was.
that's something that traders run into, particularly newer traders. They kind of they're scared as to when their next setup is going to come, so they want to force a setup. It might not be there, but they want to force it because they don't know when the next one will be. Whereas a more knows that there's going to be another trade today, tomorrow, this week, next week.
Sure.
There's always going to be
For
another
sure.
setup.
There's always going to be another setup. I mean, don't hesitate. I mean, don't even worry about it, because I mean, moving. It's not like you're just gonna
Right.
miss
Right.
that
Of
trade,
course.
and in the end, I think that happens a lot, or did happen in the industry when the prop firms came in, and they started putting the limit in time. So people were
Right.
very stressed getting trades in, because they had 30 days. With search, you've never had that issue, so don't
Correct.
don't don't stress it. I mean, just flow in your plan.
Right. Absolutely. Absolutely. So you had a gold trade, and I know last week when we met, you had a Nasdaq trade. Tell me how that one played out.
It went good. I think we met. I don't know if it was last week or 2 weeks ago. We did
Might have been
mention
two
in
weeks
that
ago.
live. Yeah, I did mention in that live that I was expecting Nasdaq to go up. By the time we connected and we did that live, we had a little retracement in Nasdaq, and I did mention to you, after the price did this specific break in the daily time frame, that we were expecting Nasdaq to do a little drop and then push to the upside. And that's what it happened. It just went up. I managed to get another trade in there. I took all profits. I only have one trade running, just with a little portion of it, and it's still there. It's still there. Even though yesterday it dropped really, really good, it really hasn't taken me out, because I'm still
Nice.
expecting Nasdaq to go up.
Nice. That's something we did talk about last time we got together, was the fact that you leave little trailers on there. You take
Oh yeah.
your main winnings out when it hits your target, but then you leave a little bit on there to run. Tell me your methodology there. How do you decide how much to leave on?
Well, I normally, when I hit my top 1 to 3, 1 to 4, I take 80% out. That's in my
80%.
plan. Just take the 80%, leave the 20% in, and then I'll just leave it, months or weeks. Sometimes I normally close my swing trades, if possible, towards the end of the year, if I do get trades moving along that time.
Oh, so
I,
do
I
you
had
have a bunch still on there?
Well, in Nasdaq, it's the only one that I have running at the moment. I haven't been doing much swing this year.
Mm-hmm.
But last year, or the year before, I believe, in euro dollar, I took the whole drop, which was the very, very first time euro dollar started to drop. And I just left it, a little portion of it. And then towards the end of that year that I had that trade, I just decided to close it all. And it kept dropping, man. I was like, oh, okay, no problem. But it's a way to me to kind of work in my confidence as well. if I see a trade running, even though it's a small portion, I get confident on it. I mean, like, my strategy is working. At least I was able to make a good approach to the market, and it's going in my way. That kind of feels good. Although that's not my main goal. My main goal is not to be right all the time, and that's
Right.
something that could happen to traders. They want to be right all the time.
Sure.
I don't want to be right. I just want to follow my rules, because even though I made a mistake, I'm gonna be, I'm not gonna burn my account. I'm gonna be, confident that everything's gonna go well. And then if you left a running trade like that, it makes you feel really good. But it's not my main goal, to be honest.
Right. So
Yeah.
do you leave a trailing stop on it? How do you handle the downside of it?
Well, normally I wait for retracements on the higher time frames and then a big push in that higher time frame. So I kind of do that trailing on the daily time frame, and it could take me some days. So I could put it on break even, at the very price where I opened it, and then I'll just wait for price to develop in the daily, and then when I have a new high, for example, then I'll just move it up a little, because I know that
Got it.
from there
Oh, so you,
price
you
shouldn't.
manually adjust that stop loss.
Yeah, yeah, for sure. Yeah,
So
I like
as
to
you
do it.
go, let's say you've doubled that small portion. Do you just you keep as long as the parameters are still pointing to it's going to continue excelling, you leave it on. And
Yeah.
then where do you move the stop loss to? How do you manage that stop loss?
Well, I keep on moving it, and then I'll just wait until the price comes back, and then probably hits me at the break-even price, not the initial price where I opened it, but where I have been moving my trailing stop loss. So I'll just keep moving it, keep moving it, keep moving it. And if at some point price breaks on that daily time frame to the downside and just triggers me out, then I'm good. I just know that until that point, I was able to get something from the market, and that's it.
Got it. Got it.
Yeah,
It'd be
pretty
nice.
tough.
Next time we come on, I'd love to do a deep dive into how you handle those runners, because a lot of
Sure.
people have them, and maybe they get out a little too early. Maybe they don't know, quite how to manage them. Sounds like you have a really good handle on identifying those and managing those runners. So that would be really nice.
I'll give a little tip there. How I started was leaving something that I could care less if it was taking out today, in a week, in a month, whatever. If you have a 0.01 lot size open, if that runs and moves on, it could add you up a little bit more, whatever, but I don't care. So a good way to start letting runners go is to leave a little portion that you really don't care about. It's like going to buy anything at a grocery store. And, I don't know how much is a mint in the States at the moment, but in Colombia, a mint doesn't even cost 10 cents of a dollar. I mean, even much less than that, right? So if I go ahead and buy a mint at a grocery store, I mean, I'm not gonna be stressful all the day or all the month saying, "Oh my, I spent 5 cents on a
Right.
mint."
Right.
I'm not gonna be careful about it. So that's a good way to kind of start letting runners go. Just leave a small portion that you don't care about. I'm putting an example of 0.01, but it could be a little bit more. And then that kind of helps and keep a data of your trading strategy. If you could leave runners, 'cause, for some people it could help. For some people, they just can't work it out with runners because their psychology, their emotions. So if that doesn't help you, then just cut the trade at your target and just move on.
Right, right. Yeah, that's one thing I was gonna say. Some people don't have the aptitude or the mental, breath to be able to leave those runners on. It stresses them out. So
Oh yeah.
it sounds like your method is a really great way to kind of dive into that and have something
Yeah.
on, something running. So just very insignificant portion just to keep your foot in there, and that way you can kind of build a strategy around runners like you have, get a feel
Yeah.
for it, so you kind of know when is this something I should X out of. I did well here. Or is this something I can leave on and see what
Yeah.
it develops into?
Yeah, and for sure to do that, you need to have higher time frame on your side. So it's like that for me leaving Nasdaq, for example. Now that that's the one running, I didn't. I've been looking at the
Sure.
monthly, weekly time frame, and that kind of gives me a little hint. Price is moving up, and we might go for that. Historical high again. So if it
Yeah.
if it does
Right.
happen, that's gonna be a nice trade that we'll publish in a few
Yeah.
weeks.
Absolutely. Absolutely. Tell me about. I'm glad you went there. Tell me about your outlooks from a macro perspective. I know we have some numbers coming out next week. What do you have on the calendar that's exciting you and some trading opportunities?
Well, I'm not much of a like, trader. I'm much more of a technical.
Hmm.
I look at the specific news like CPI, interest rates, and non-farm payrolls. Those are like the three main news I'm actually aware of, because I know there's could be good momentums in the market. But in the technical way, I still see everything bullish. So far I don't have anything to say. We might start seeing lower prices. So we'll see. We'll see.
Nice. Now, you mentioned those three economic news items that you follow closely. What is your
Yeah.
plan with those? Do you front run those, or do you wait for them to develop momentum and after the numbers come out and then ride the momentum?
It depends, because if I'm in a trade a day before or a few hours before, I'll just protect myself if I'm profit and then just go in. If I'm not in a trade, I will normally like to for the news to come out and then wait for the reaction on it. Normally, what happens in those specific news is that price goes and grabs daily highs,
Hmm.
or session lows or session highs, and then starts moving up. As a matter of fact, we did have a news. I forgot the name of the news. There was some sort of news on the dollar. I think it was Tuesday, right after that news event. It came out, it kind of swiped the lows of, I think it was Asia, London. And then once it was, going up, I hit my trigger, because that's part of my plan as well, add a specific, and then, it
Right.
came out pretty good. So I
Nice.
normally like for the news to come out in a trade, a couple hours ago or days before.
Nice. Nice. And
Yeah.
are you adding to winners?
Yeah.
I
Yeah, for sure.
once you get some direction, you have no problem adding to it. Tell me how
Yeah, I
your
don't have
trading
any.
plan reflects that.
Well, normally if I do get specific placements, I'm like just put stacking trades. I don't normally do that. I like, I'm more of a secure type of guy. So I really like
Hmm.
retracement to specific levels, and if I'll just trigger another trade and so on. But not like if it's running at that momentum, just keep on stacking. I'm not kind of like good at that, to be honest with you. I know Joseph does that a lot. If you follow him, he's pretty good at that. But
Sure. Oh
not
yeah.
not he's good.
Yeah, he is very good. Oh, yeah, I understand. I feel the same way. I want a reason to get in. So, like you said, when it
Yeah,
hits certain retracement levels and it's giving me a signal again, I'm comfortable getting in at
yeah,
that point. Whereas just I don't have that intuition the same way Yosei does to just
yeah.
stack those trades.
Yeah, no, I mean, it's part of the personality, I guess.
Yeah,
I'm
I
more
think
of a
so. I
calm
think it
type of
is.
guy. Um, and in the end, that's when I came up with my plan. Because whenever you're developing your plan, you gotta ask yourself emotionally, how would that work for you? Like,
Right.
if in your plan it says that you're gonna stack trades, how would you feel? I mean, do you really feel comfortable with that, or you're definitely not gonna feel comfortable? You're just gonna do it because everyone else is doing it. So in my case, I had to be honest with myself and say, I'm not into that, high emotional type of thing, roller coaster thing. So I'll just keep it simple, and if I have a reason to go in, I'll go in, and that's it.
Right. That's why it's so good, like I mentioned earlier, that you're having other people in your show from the Latin community because there's not every strategy works for everybody's personality. The
Oh
strategy
yeah,
may work, but it might be very heavy on somebody psychologically, whereas a strategy like yours for a calm person might be much better. Somebody who
yeah,
enjoys those roller coasters, they might prefer something a little faster. So there's
yeah,
something out there for everybody, and there's many strategies that work really well. And you just have to find one that fits your psychological profile.
for sure. And that it's simple for you to understand. Like, I don't know, some people like that the price crosses EMAs, and they every time it crosses, then they take a buy or a sell. I mean, I respect whatever strategy you choose, as long as you make it simple for yourself and you don't overcomplicate it. Because if you do,
Right, absolutely. Now, were you somebody in the old days who had a lot of strategy or indicators on the chart?
yeah,
You used a lot of
I
moving
did.
averages, and then
There,
it's
there
so
was
hard. What am I looking at? There's so much noise on there. How did you kind of get away from that? Because so many new traders have that problem.
there was a time when I started that I started using this strategy that called what's called the market maker method.
Hmm.
And then that strategy specifically, it did have like some sort of template in the MT4, and it had a bunch of indicators, right? So you kind of think or I thought at that time that I looked very professional, having a bunch of indicators, and then my main issue was that I
You felt like
relied
a
on the
scientist.
indicators. Yeah, yeah. And then my main issue was that I relied on the indicators. And hey, there's no problem at all in using indicators as long as they're like some sort of confluence and support, but not the ones that take the decision for you, right? That's the kind of like one of the things that you have to separate. Indicators are not equal just because the indicator says it. You have to put some, mind into it, some analysis into it, right? So in my personal case, it made me a lot of noise having too many indicators in my chart. So I kind of started to struggle, and one thing that pushed me out of that is that I really wasn't having results. So I was
Right.
like,
Right.
I'm just gonna keep, pushing some sort of indicator and stuff in my chart. It's not really helping me out. In the end, I just, a strategy where I don't really use indicators. At this point, I don't use one indicator. My charts are pretty clean. All I mark down is perhaps support resistance, probably trend lines in it, um, and zones, and that's it. I mean, I don't really use an indicator, not because I think that they're bad, not at all. I mean, don't get me wrong. It's just that for me, it's just noise. And I think everything that you need to know is in that chart. So you don't really need much indicators from my point of view, but some people do need
Right.
them. So if it works for them, cool. As long as you don't only on that to make a decision.
Of course. Yeah. You need your confluences. You need a trading plan. So, the indicator's only giving you half the story. To jump in or out
Exactly.
based solely on an indicator is probably a little bit reckless.
Oh yeah, for sure, for sure.
So as you're going through, you're kind of developing your strategy. You got away from indicators. You went more towards a price action method. You started to see better results.
Oh yeah, yeah, for sure. Because I started to focus on something that I wasn't taught at the beginning. I think most people struggle with bias in structure, right? They think the price tapping a specific level, indicators say this, and you just gotta get in. And there's more into it. There's the whole structure, the whole story behind why the price is going up. Perspective, right? Because as I said, I'm not much into
Right.
them,
Right.
and they're very important for sure. But you, I take a decision, so I kind of rely on that. And then when I started, I didn't have that, so I was like, through time, I wanted to understand like the why. Why is it moving? Why should I expect a buy? And then not just get into the point of saying I want to be right all the time, and if I say it's gonna go up, it's gonna go up. Not but just to have an idea, like if I was not a stop loss, then how can I just reduce that? And then one of those ways is understanding the structure of the bias of the market, like what's the most probability of and if the majority of the days I get that, then for me every day is gonna be right.
Right. Of course. Of course. You mentioned something interesting. You mentioned that you went from not only wanting to be right, but you wanted to know the why behind the market was moving.
Hmm.
What was the training or the learning course there? How does somebody learn the why?
From the basics. Like I thought it was stupid towards the end, towards a few years later. I thought why would that structure is making high highs, higher lows. That's something basic, right? But it's so important. In the end, there's only two ways: either the or the price moves down. The main thing here is like in my specific case, when will that is going to change? Changes, and I wanted to be aware of that so I could just switch on to the downside, right? So that was like the main thing. Like you're never gonna understand why price is gonna move up down, but according to your strategy, at least understand when is that gonna down or gonna turn up, right? So I guess the why is probably wasn't my main objective, but like when is gonna do that so I could just start
Got it.
going
Got it.
and
So
following
you're
the
you're looking to decide when a high probability that they were going to get a reversal, or you're looking to
exactly.
avoid reversals, or you're looking for continuation, and you
Yeah.
wanted to find the why.
Yeah, because it happened to me some funny moment when I was starting in trading. I think some people might, feel like that I was back in the days, and then selling just because it was gonna sell. Selling, I kept selling. Yeah, I took a few minutes and it stopped me out. So I felt like I was going against, some sort of force that I was gonna, I think, or I thought it
A
was
much
gonna
bigger
pull me
force,
down.
right?
Yeah, I was like, what? Why is it just stopping me out? So, it was so simple, just stopping and saying, hey, I don't want to be right, but if it's stopping me all the time, I'm. So it's okay to have a stop loss, but don't insist on getting those stop losses. I mean, that's what I just kept selling, selling, selling. I remember it was just pure sells, and just price kept. And I never even asked myself like if I was right, or why or when did this start changing. And when I realized that, and I started, making it simple and identifying, those possible turns in the market, then I decided to, at least if I hit a stop loss, I'll just take my time to understand why I got stop loss, and probably, the whole trend changed. So if it did change, I was just gonna go into that new trend. And in the end, it's just like going into the basics, why the price, like when the price is turning out, and then you could get a better idea of what to do. And that's what happened to me specifically.
Nice, nice. So you went back to basics. You learned the price action. You followed the charts. I would imagine that took you a long time. A lot of chart studying. Give me an idea of how long that took you.
Man, it took me more than 3 years. I was so not disciplined, to be honest. In my beginning, it took me more than 3 years to be profitable. And I believe, like, nowadays, I see a lot of new traders coming in, and they don't take that long. Because there's people that in the past say, don't do that. I mean, if you want to be profitable, you need to get your mindset. You got to have a plan. You
Right,
have to have
right, of
risk
course.
management. Back when I started, I was never interested in that. And I think, I had like my job at the moment, and I was trading, and then I didn't put much importance into that until I got fired. And then when I got fired, it was complicated because I had to, find a way to make my, pay my bills, pay for
Sure,
everything,
yeah, of
but
course,
at the
of
same
course.
time, learn the right way how to do trading. So it was a tough time, but I think it's because I was just not disciplined at all. I didn't
So
even have a
give
plan.
me an example when, let's say somebody comes into your course. What's the typical, I know it changes for everybody, but what's the typical average time you see for them to go from, zero to somewhat consistent to profitable?
Normally 6 months minimum. And the reason is because you got to be realistic. You could
Sure.
understand strategy, but there's a process that you have to develop individually, as your mindset, for example, your emotions. There's many things that can affect your straight trading, method or whatever you do, because probably, I don't know, you're very scared of losing money because you had a some sort of scenario or situation in your past in your life, not necessarily doing trading, that you lost and you felt really bad. So every time you lose in the market, then you're gonna feel that same way, and you want to avoid it. Us as humans, we want to avoid, being afraid. We want to avoid getting into
Uncomfortable, right.
danger.
Yeah.
Yeah, we just want to be comfortable, and we just want to be, everything loose and nice and neat. But that's not the way it works, right? So it takes time for them to kind of realize that, and then I'll say 6 months is an average time that I'll say someone could get profitable, just to be realistic,
So
and
now
it could
is
take
it you
more.
mentioned a lot of those things were psychological based. So the learning the
Yeah.
technical aspect of it's probably a shorter time, but for
Oh
them to
yeah.
mature psychologically, you say a roughly at least 6 months.
Oh yeah. Yeah, because you can learn the technical in a month, right? And then you start practicing it. And what I ask my students is, if you really wanna get comfortable with the strategy, you need to have 100 trades documented. Of what it could be the same pair, it could be several pairs, but have at least 100 trades documented. If you want to really get an idea of the data of your strategy, like your win rate or how you're gonna react to a specific situation when the price is developing, you need to have data. You need to
Right.
journal it. So if you have at least 100 trades, you got a good amount of data there to know if that's really working for you. So you need to back test. You need to keep a data of everything you do in the market, and that's going to really help you. And that thing that I'm just mentioning is something that people are lazy to do, right?
Sure.
So that
That's not the fun part. The fun part is getting in there and spending money.
for sure.
Journaling's the hard part.
Exactly. So that's why I say 6 months, because it happens to me even with students that pass the 6 months. They come they come back to me and they say, "Hey, I need a session with you," and I'm like, "Okay, I'll do a session, but just bring over your journal." And then it's funny, but they'll say, "I don't have a journal," and I'm
Ah.
like, "Then how do you expect to do good? How do you expect to feel comfortable if you don't journal your trades?"
So
And
even
with
now, I mean,
journal,
you've been doing this a long time. Are you still journaling every trade?
I do, I do.
Good. Awesome.
um, you have to journal it because I mean market changes through time. There's times where it's more momentums, there's more, I don't know, whatever the thing could happen. For example, when we went back in 2020, all this pandemic time, it was really uncomfortable. It was something new, market was reacting to it. So you just got to be prepared, and in the end, it's not that it's going to change your strategy. I mean, it's going to work out good, but you need to journal, and I stress it a lot with my students. You need to journal your trades if you want to feel comfortable. If you don't do that, then I mean, don't expect good results, or don't expect you
Right,
to
of
be
course.
in a live
You're not putting in the work.
not at all. I mean, don't expect to be live in the New York session and be comfortable to doubt. Now, when you repeat
Right.
something, you're not going to doubt because your plan is there. So I even struggle with that with some of my old students. I had one this week. He had a great scenario. The trading plan was complying with everything, and he didn't take it. And I was like, "Why didn't you take it?" It was like, I just thought I don't know, I wasn't comfortable with it. And I'm like, "You just didn't follow your plan." And being lazy is not only not journaling, but not executing your trades. A demo account is not going to make you money.
Right.
Marking your trades on TradingView is not going to make you money. You need to execute, and that's the toughest part overall, I think, of a trader, to execute. And you just got to work it out. You have to
Where do you
execute.
feel that where's the changeover? Is it, becoming confident in the strategy? Where do people develop that ability to execute?
Well, first of all, yeah, journaling, getting like comfortable with the strategy, and then asking yourself personally, like, how do you feel comfortable? If you realize, like, all this session we've been pointing out that, like, how do you feel comfortable? Like, you have to examine yourself and say, how do I feel comfortable? Do I feel comfortable risking a 1% on a trade, or do I just do it because I follow a specific trader that does it, and he's showing me like he's making 10K, 20K, 5K in a trade, and I want to do that? So what's the real reason why you're executing? Is it because you're following someone else, or because you feel comfortable? In trading, you need to feel comfortable in what you do. So I'll put you an example. One of my mentors, it was funny when he was teaching me, because I asked him, "Hey, what's your risk on a trade?" And he's like, from an 100K account, I only risk $100, and that's like a 0.10%. And I was
Wow.
like, why are you risking that if you're good? I mean, like, your trading strategy is good, whatever. And all he answered, he's actually from Asia, so he was like, in my country, $100 is a lot of money, and I normally make 500, a 1K, back in that time, right? And that's good. Seeing $100, for my mind, for my emotions, comfortable. And even though I suggested him to, risk a bit more, he's like, I'm not going to change what's making me comfortable. Eventually, through the time, he started risking a bit more, but you have to start with a specific percentage um, of risk that's going to make you comfortable. People think first about the money, and they just want to make money, money, money. And it's okay. You want to make money if you're making trading. But first of all, you have to develop your mindset, your emotions, everything before you think about making, big money in the market. So
Right.
that's something
Absolutely.
I highly stress on people that follow us.
Awesome. That's a great point. So you're, finding your comfort level. So maybe 1% of an account isn't appropriate for everybody. Like you said,
Nope.
that guy hit $100,000 account and he was only comfortable risking $100.
And I tell you, he was making like good money. He was letting that, even risking $100 for him was so comfortable that he let like the trades run, in a larger profit target. So he was risking 100 and he was making 500. He was making 1K, 1.5K, and towards the end of the month he was making money and he wasn't risking like a lot per trade. So you
That's
have to feel
interesting.
comfortable.
It's interesting. So he had a the way his mindset worked was he was willing to take a little bit more risk on the upside because his risk on the downside was so low.
Correct.
Interesting.
So yeah.
Neat. So helping people find their comfort level. That's awesome. Well, I know you're running around today. I know it's Friday, and again, thank you so much for joining me. We'll end there. I know we'll see you next week for Wednesday, Latin America edition,
For
and
sure.
I wish you all your trades the best, and
Thank you, man.
I hope you have a great weekend.
You too. Take care. Bye bye, everyone.